Alright traders, welcome to Trading Week Ahead. This is Ken Calhoun. It's a real honor and a privilege to have so many of you here. We have such a big turnout each week for our Saturday shindigs. We want to be on the right side of your trades. Right now with the market volatility, you may be a bit concerned about where to trade. Should I stay all cash? I'm mostly cash right now, just so you know. With a little bit long in the inverse ETFs and oil, I will position size and scale into those if they continue to bounce as they have this past week. As always, all information is for educational use only. I'm not making any advice about to buy, sell, hold them by watching this. You agree not to make actual trades. Hey, I wanted a big shout out to one of my traders in the live room, Jake. Jake B wrote in just yesterday, and I thought I'd post this for you. Amazing amount, most professional room, by far best, thorough, concise. What I like best about what Jake said was this one. He said, no time wasting chit chat about someone's cats or how their weekend was. Yeah, we hit the ground running in trading the open. We're very focused on making winning trade alerts for our members. This was Thursday. How we did performance of the room. We had one stop and a handful of wins. Not a huge win. We had net 2.2 points in the P&L. And Wednesday we did better. We had 2.67. Wednesday was the hot day. Even though we had two stops, we still made more net in that day. Again, paper trading entries and exits on the best of the high velocity charts like Win and Lululemon and Citrix and ITCI. And also on Tuesday, we did reasonably good, just around $600 on 300 share trades, mostly green as usual. So that's my Trading the Open live room performance for the last week. Great to see. It's good, and I wanted to say a big thanks to Jake for sending in the testimonial yesterday. It's always good to see those. So kind of a funny quote from Samuel Clemens, aka Mark Twain: do the right thing. It'll gratify some people and completely astonish the rest. So bye. Let's see what we're going to do. Chart puzzle of the week. VXX 90-day chart. What do we got going on here? Well, take a look, gang. On VXX, which goes a little something like this on the 90-day. We've got a recovery pattern. Had a doji here with support on the moving average. We had a shooting star here. My quiz question: where would be a sensible place to buy, potentially buy VXX? What would be your long trigger? Hit me with your best shot, traders. Boom! Where are you going to buy VXX? I'll tell you where I'm going to buy it. Personally, I'm going to wait till we break above the nearest whole number. This is a good strategy. In general, when you're considering a swing trade, you don't buy right above resistance because often you get a false breakout. In fact, you may have seen my article in this month's Technical Analysis of Stocks and Commodities called Breakout or Fake Out. One of the things you want to avoid as a trader, we've all been there. You buy the first sign of a breakout. Hey, looks like it's going to go. And then, oh crap, not so much. And it goes down. You take a stop and say, darn, missed it. And then it runs up without you. Say, son of a gun, I missed it again. Well, stop doing that. Put a false breakout buffer, a safety buffer. On swing trades, I usually at least half a point. I'm going to wait till we get clear 27. So I'm going to buy somewhere over 27. Maybe 27.30 or so might make sense. And although I tend to move kind of fast, because I drink a lot of coffee. I'm a caffeinated trader. Drink. Coffee. Not other stuff. Until night. But anyway, okay, good to see it. Everyone's saying yes, of course, by all means. A resounding yes. Good idea. Yes, keep this on our... Okay, thanks, everybody. Big, long scroll of yes and some comments in there. All right, well, let's move on. You got the picture. Inverse ETFs, we like them. Stock market's crashing. Remember to see me live in Las Vegas in a couple of weeks, the 15th and the 16th. By the way, too, if you do show up, be sure to get there early to get a good spot, because my events, especially these free ones, it's absolutely free, always get a standing room only crowd. You may have seen me in this month's issue of Technical Analysis of Stocks and Commodities. It's a good article. I put a lot of work into these on breakout or fake out, looking at how to tell the difference between your charts, primarily for swing trading stocks. So keep an eye out for that. If you don't yet have that, it's currently available on newsstands around the free world. Be sure to pick up a copy of that if you're not already a subscriber. What do you say? What's the market going to do next week, and how are we going to trade it? Well, I'm still a bear. I think the markets are going to sell off. I've got 1892 as S1. You can trade the obvious low under the 1860 or 1865 or so, but I'm going to start shorting the market at 1892. By going long in the inverse ETF. So S1 on the S&P is 1892. That's what I set myself. That's what I'm using in my own capital trading accounts. And for the R1, I've got 1988. and going in a little bit earlier. Now, would that be right or wrong? Technically, the better place would be to wait for a breakout above the shooting star and above this moving average, or say 2025. That's the professional trader's entry trigger. We wait for that, but I don't think it's going to get there next week. We may chop around a bit. So I'm using a 5-day high breakout strategy for the first sign of a market recovery. I'm still skeptical. I think the market's going to sell off, but if it does do a surprising relief rally or a bounce, dead cat bounce like we had recently, 1988 is my R1 that I'm going to start putting on some baby trades, some pilot trades in for some of the best movers. So there's that to work with. Now let's take a look at a couple of Rockstar swing trading charts. One that you may want to keep on the radar is ES. Okay, the ticker is ES. And what I like about it is it's gone from 45 to over the 49 with relatively good breakout continuation range. What I like too is the big up move yesterday, right? It ran from 48 to 49 and change. So got a reasonably strong chart in ES. Okay, that's the ticker for it. Eversource Energy. From a sector standpoint, or broad market sector standpoint, energy sector has been strong lately. Another one is AEE. Okay, this is a nice breakout continuation chart I thought I would also bring to your attention. We've got a reasonably good uptrend in AEE. So I want you to keep that one and ES on the radar for the week ahead. And we've got a relatively strong selling channel here in the S&P lately. So I'm modestly bearish to see if we take out new lows. If we look at the VIX, as with the inverse ETFs, it's been on the uptick lately. So pretty good volatility in VIX as well. Okay, let's move on. What you're looking for are the charts with the best intraday point range. And from an intraday trading standpoint, the reason I like these types of charts is they run up nicely. Like the gold miners have run up lately too. We've had gold. These are all, by the way, counter trades to the broad market. When you see defensive trades in commodities and the instruments, commodities and rare metals like gold and energy and oil and the rest of it, that tells you the hedge funds, the professional trading community, institutional trading volume is putting their money out of stocks and into some of these hedges. And that's why we're seeing defensive hedge plays in commodities like gold, like AEM is one of the minor stocks. We nailed it on Thursday. I called this one long for a breakout in AEM. We called a short call in ITCI on its drop. It's another good volatile mover with a nice wide trading range, right? 42 to 48. As you take a look at all this, try and figure out how to be on the right side of where the institutional volume is. What you'll find in your own trading is it's not enough to be almost right. It's you've got to make money as a trader. And the way to extract money out of the market is to know, first of all, what's worth trading, and second, where to trade it, where to get on your entries and your exits, and your timing skills to get you out, like I did with the inverse ETFs, before the market pulls the chart back down against you. So making sure you're on the right side of your exits makes a lot of sense. Anyway, for the live room, our winning alerts are green highlighted, our losing alerts are red highlighted, the stops. And as you can see, we're usually mostly green most of the time. What I would pay attention to is sector relative strength, and we can see that the energy and other sectors that we've covered so far make a lot of sense. Energy sector's been up, and we see other volatility in some of these other sectors as well. Okay, let's move on. Our E-mini triggers, for those who trade the ES, it's a 3-day chart. You got kind of almost an inverse head and shoulders here. The ES, let's use 19. I'm going to be very conservative for a long trigger. I want to wait till 1961. And the reason is I wanted to get above this upper Bollinger Band to get out of the variance, the chop range of this chart. So 1961 may make sense for a long day trading. We may scalp it inside here, but for big picture, let's use 1961 as R1 and 1892 as S1. The reason is we've had relatively choppy markets the last 2 or 3 weeks, and you don't want to get ground to pieces with the death of 1,000 cuts taking small stops. Instead, a more intelligent, strategic, focused approach is to wait for small breakout regions above the obvious resistance to go long or below the obvious support to go short right now. You take a defensive, more of a hands-off approach to the market when it's in a chop zone because you're likely to get stopped out, right? So what you want to do is wait till one side or the other wins the battle, jump on board with your trades in that directional play for breakout to the upside or the downside, and then make winning trade decisions based on that volatility. Now, it's very encouraging to see so many people here. I don't know if our numbers are up. 3629. Okay, so we're up to 3,629 of you registered for these. Great to see so many of you turning out too. A big turnout today. As we're looking for opportunities in the week ahead, I want you to think about how to intelligently make sense of our markets and trade the best charts out there. AEM, another good one, by the way, I mentioned for a day trade. Remember, minor gaps tend to continue most of the time. It's what I've taught for many years because it works. And some of my best winning profitable trades in my own account come from minor gaps that continue in favor for me. So keep an eye on those type of charts as we look for new trading opportunities coming up ahead. Let's see, for our Forex traders out there, US dollar has shown some resurging strength lately. The dollar CAD continues to be strong. The US dollar is continuing to do good against the Canadian dollar. Big picture, if and when oil comes back, the Canadian dollar will also bounce or start to do well, and these will start to drop. So if oil starts to spike, you want to be out of any currency trades that are against the CAD, like the dollar CAD, the euro CAD, the pound CAD. So anyway, we are parked up at new highs here, so we simply want to wait for new highs in the US dollar to the Canadian dollar, and the other one is the dollar Swissy. Also has a relatively decent uptrend continuation here. What I like about this is, unlike a lot of the other pairs, those two, the dollar against the Canadian dollar and the Swiss franc, have also taken out new 50 or 12-day new highs. So we've got reasonably strong recent price action. We still want to wait for it to get to new highs before going long, but those certainly make sense to keep on the radar for the week ahead as well. All right, what else do we have? Intelligently, I want you to think about what the difference is between, where you're trading and what makes sense that's different from what you may have learned elsewhere. You may have noticed that we put together a new website. It's still in development. I'll have it ready to go within a few days, but for the stock trading success system with Steve Nissen and I, one of the things that we really like is all these success stories from all of our traders over the years that we post here. We have hundreds and hundreds of people who've ordered, and over 102 testimonials that we've posted over the years. This is a sampling of them, but one of the things that we like reading about that makes such a big difference is the success of our students. And I know Steve shares that, the passion for teaching and the appreciation of all of you who have found our training valuable. What we encourage you to do is look at the differences, kind of the link points, or connect the dots between what's different from what you're currently doing and how professional traders trade, and what we teach that advocates that makes sense for you to trade. So take a look at some of the successes our other students have had, and think about what it would make in terms of a difference in your life. You've seen so much hype and BS out there in the trading industry from so many non-professionals that act like they're professionals just because they want to sell stuff to traders, but they're not even real traders, or they're not industry experts. Make sure that you are more selective about from whom you learn. Make sure there's proof elements, that the educators prove that they trade. There's ample video testimonials. You can see many of those in our promo reel here that were captured live at the event. That we have third-party credentials. We're stocks and commodities of all these systems out there. They said ours was enough to certainly gain enough knowledge to trade for a living. Make sure that you're learning from people that have the authentic industry credentials and not all these wannabe internet marketers that have been out the last 5 years or so infesting the trading industry. So, I am really thankful to all of you, and really good comment here from Gail is saying it's done during real trading days and in real time. And that's one thing that characterizes my trading, is it's based on real trades done in real markets and not all the make-believe PowerPoint pitch fest stuff you may see from other people out there. So, Anyway, my success, your success is my success, and it's great to see y'all here. So we're going to wrap up. This is the sign of institutional buying, of high volume, high price breakout. So keep an eye on oil. You could just, I trade the ticker oil, OIL, of many of the oil instruments, because during crude's drop, there may be a recovery due if we're able to take out new cut pattern highs above the moving average and the rest of it. So keep an eye on some of these for good pivots. Make a lot of money out there. You know, I always like hearing success stories from my traders, and it's great to see how many of you have reported how well you've done, and I appreciate that. And I like to continue to help you make bigger winning trades more often. So with that, I'm going to wrap up. I've got my Swing Scans event coming up in a few minutes for all of my subscribers for Swing Scans. I don't have a lot of PowerPoints here. I think that's about it. Anyway, I'll see you guys next week. Trade smart out there. Do well. Learn from the best people only. Don't waste your time on people that don't know how to trade and pretend to trade but can't prove they trade. And make some money, right? Do well. Money's out there to be made. That's the neat thing. You know, on my biggest winning day, September 1st, selling most of my inverse ETFs on the high, you know, which is the 15-day high was that day. See what you can do in the week ahead too. Make it a personal challenge to make a lot of money next week. Figure out what you need to do differently to get there. Make sure you subscribe to my resources and get my courses. And those of people that are also good to teach, you know, that actually are real traders that have P&L proof they trade, caveat, and are recognized industry experts, and make it a winning week ahead. So thanks so much for being here. Have an outstanding week, and I'll see y'all in our next session next Saturday. Bye-bye, everybody.